Welcome back. You're watching Big Deal, and Ashley and Anshu are still with us to talk about the investor sentiment in a changed world environment. So Ashley, tell us about the themes and the shift in the theme that is really taking place for PE, VC, new investments coming in a changed environment now.
Yeah, Nisha, with the situation on the interest rate changes, one theme that we're seeing is capital is moving towards industries that are less susceptible to interest rate movements. So, sectors, for example, like business services, IT, which don't really need capital. You're seeing a lot more opportunities in those situations. We're seeing some in pharma, on that side. You're moving away from, more traditional manufacturing infrastructure kind of themes. And then the last sector that seems to, be generating a lot more deal flow is around what we call new economy or the digital economy, which is really consumption-based, industries that are focused on the, new age economy where there's digitization taking place, there's technology being used. So we're seeing a lot more opportunities around these areas relative to what we were seeing earlier.
All right, so big shift really taking place. And yes, you spoke about the capital intensive sectors being avoided right now, and interest rate is hardening all across. So Anshu, given this scenario, you can always make money in any changed environment. So I'm guessing that the theme is now shifting more towards the fixed income side, and also about the stress debt situation. We have all gone through the cycles that we have seen, and that has given some very big returns to the investors as well for turnaround stories. Are these two picking up?
Yeah, absolutely. And Nisha, the fixed income part of the portfolio has been a lot of pain for a lot of investors because biggest allocation, post-tax yields have been very, very low.
Yes.
Right. So maybe I can share with you some opportunities that are available now.
Yes.
See, if you put your money in a FD for even for 5 years, you will get less than 6%.
Yes.
Post-tax basis, nothing, right?
Yes.
But if you invest in a perpetual bond of a PSU like a State Bank of India or a BOB or even a HDFC, you get about 680 to 7% 5-year yield to call.
Right.
So that's an opportunity that some of the high net worth investors are going for.
Yes.
Right. The second opportunity is going for simple things like a Bharat bond. A 6-month maturity is about 6.8%.
Right.
And a 3-year maturity is 7.3%. AAA PSU papers, right? These are not very popular because not much of media covers that, but these opportunities are available.
Yes.
Then there are fantastic instruments like InvITs and REITs.
Yes.
Right? You get about 6% to 7% yield.
Assured cash.
Assured, yes, more or less.
Yes.
There's consistency.
Yes.
And there could be a little bit of pickup, from a appreciation perspective.
Yes.
So, and it's a big asset class now. Right?
Yes, and it is now gaining momentum because of the interest rate hardening scenario.
So,
because it's a good combination of fixed and equity.
So I think those are good opportunities available to investors.
Yes.
We are still not saying to investors that go out and build duration in your portfolio or invest in long dated bonds or anything like that.
Yes.
The other opportunity is market-linked debentures. Again, 7.5%, AAA rated corporates raising money through these instruments.
Yes.
Not widely again known,
yes,
but opportunities exist in every environment, like you said. The other area has been very interesting is that the investors are saying, I am happy to lock in 10-year money if you give me an infrastructure-backed kind of a product or a solution where I get about 8% coupon every year, and then I get a higher IRR as I exit.
Yes.
So for the first time, last 2-3 years, we have seen that investors are willing to commit a 10-year capital to some of these products. It could be infrastructure yield products.
Even real estate is seeing money because whenever equities fall, money flows into real estate.
Unfortunately, what's happened is, obviously real estate is picking up, the revival is happening. Not many products and solutions are available today. Right? Other than REIT, you cannot invest in commercial. It's very hard to invest physically in real estate. There is a lot of interest, but supply is not there today. Right? So therefore, keep it simple, put in money in the REITs and wait for some of the good asset managers to come out and give you good quality products.
So there is rotation. that is happening and theme is shifting.
Yeah. The other interesting area is venture debt funds.
Right.
There's a completely new category of products and solutions that has come.
Yes.
Right. So it's a combination of yield.
Yes.
So debt like regular cash flow, higher coupons, and equity like kicker.
Yes.
Right, in a 5-7 year product.
Right.
So I think those are new avenues.
Anshu, I'm very glad that you mentioned venture debt, because this instrument had not picked up in India, and it was expensive equity that the promoters really landed up giving to private equity and VC circle, and IVCA can talk about that. So actually now this, exit opportunities have also been constrained for the investor class, and especially in the startup space. How do you see that particular scenario at the moment?
Yeah, no, look, the IPO markets or capital markets have always been cyclical. So you've had situations where, capital markets boom, and then you go through a phase where there's the capital markets are non-existent. Right? So you will continue to see that. We are going through a phase where the last couple of years have been very, very strong, and you're seeing a correction to that, and you will see that for a little while. So that is something that people need to take in their stride. Our advice to companies is, obviously we look at an investment exit horizon, and the reason why we say it's a 5 to 7 year investment horizon, because you don't know what's going to happen in year 5. Yes. So you should have the ability to be able to stay in if markets are not conducive for an exit.
Yes.
Right? So I think that staying part, at least as far as good companies are concerned, they will be able to raise alternate capital, which could be a bridge sort of finance if the IPO is getting delayed. And that will be able to sustain them for the next couple of years or so. And I think with good companies, you will not have that issue. As I said, there is capital sidelines that wants to be investors, that's waiting to be invested. Besides, from an exit perspective for a private equity universe, there are 3 broad avenues. One is the capital markets, which we talked about. The other is a sale to another financial sponsor, which is
secondary. Yes.
To another secondary. Again, because there's a lot of capital sitting on the side, one of those transactions are occurring.
And strategic, actually, strategic is the main point. I just have a feeling that now consolidation is something that could be the last resort for the exits, timely exits in this particular case. One word answer.
You hit the nail on the head.
Okay, so consolidation will be a very big theme picking up. We are running out of time. Final question to you, Anshu, on the IPO market. Your HNIs, ultra HNIs are the big ones who push the IPO. How is the response there for IPOs and especially startup IPOs?
I guess there's a big amount of learning all of us went through when a lot of this digital companies listed. And now there is clarity as to how to evaluate what clients value and what they don't, what markets value and what they don't.
Yes.
So I think we are maturing as investors when it comes to listed companies from the technology or the new economy sector.
Yes.
So all that learning will come into play when newer IPOs will come.
So right now muted approach?
Yeah, there is muted, but I would say good companies will always have backers.
Right.
Good companies will get the demand, and we've seen in some recent issues.
That's right, Anshu. But your industry also made a killing out of the pre-IPO products that were sold, especially in the startup space. All right. With that, thank you so much, Anshu, as well as Ashley, for joining us here to give us a sense of how the investor sentiment is really changing with changing times. With that, it's a wrap on Big Deal. Thanks so much for tuning in.